Hey guys, so on to lesson 7. Alright, so from the previous video we had a little bit of action on the pound. When I seen price come back up, okay, I was monitoring GA and GU. GU, I'll get to that in a moment. It did exactly what I said and it's about to roll over. I'll explain that in full detail. GA is about to melt too. I've seen this PA here. I moved my stop past break even. I got stopped out. Unfortunately, I was up like 40 pips at one point, came into 8.4. You can clearly see the region where it's taken money there, and now the liquidity has been drawn in, and the market is probably going to go to the target. I'm out of this trade, but I've just entered GBP USD. I'll go into that in a moment. You can see over here we had a huge spike above, but we reacted and responded, to this wick. So it looks like we might be breaking that now. No, we've got a nice breakdown on the hourly. Unfortunately, again, the cycle yesterday was relatively quiet, so in the next 3 days I do expect a lot of movement. I'll go into cycles later on. Sterling, I did mention from the prior video, we will see an uprise of 30 pips. So we went from 2,440, we made highs at 2,489, a little bit more than 30 pips. However, if you look closely here, look at the shoulder. I put the small marking on the shoulder over here, guys. Spike through it, and then look over here. If I put my crosshair at the high, can you see where this spike is like 1 or 2 pips lower? Because it's now created a lower swing. The entry, which I've just taken, was when this candle closes on the 60-minute, showing me where it spiked into, showing me that the previous high wasn't breached. Now I'm looking for the rollover. My stop is above this high by 3 pips, and my target is simply born below here. We do have some time left on the 4 hourly, though it can float around a little bit right now, so I'm expected to stay and remain in this trade for maybe a good few hours. Alright, so getting into the second segment, I believe I can do all 4 charts in this one video. So let me just line everything up. So we have Sterling 4 hourly, CAD 4 hour, great. So let's start with GA. So once you're satisfied and you're happy with your 4 hour markings, one thing I would just like to add there too is this spike, can you see here? Again, you can, if you really want to go in and draw. That's where it's reacted from, right there, guys. If you were to translate that, let's just have a look how that would look on the hourly. There you go, that's the hourly there, and that's where we spiked into. So again, it is preference. I do have 4 on here right now. Again, I had that by eye, but just another example of how specific these methods are. And here, if you spotted this, a good trade on GA, if I wanted to get back into GA, would have been the bearish breakdown, the bearish engulfing off 8.4, off the back end of what I've just drawn on there and what I've showed you so far. And again, look, you would have been profit. The stop would go 3 to 5 pips above the previous high, so above this wick here. So you've been profit on this trade. Again, all of this stuff is yet to come. I'm just introducing these concepts slowly to you. Alright, so we are happy with what's going on. I probably will be flicking back and forth on Sterling, okay, because I'm in that trade at the moment. Sterling will hopefully account for the break-even loss I just took on GA, but look at this motherfucker melting now. Look at this fucking trade going into and I wouldn't chase that because I missed the entry, but again, I'm in Sterling, so I caught that one pretty nice. But if you were to enter at 8.354, you'll be over 50 pips up, 50, 60, 70 pips on one candle. Damn it, but we can clearly see price behavior and we can learn from this. We can journal this. We can, you know, put annotations on here, screenshots as to where it came into and why. Translating that information over to the hourly and then basing trades on that. So guys, let's get into it. So very right, the next method, once you've done your arrows and once you're happy, it's now time for ranges. Ranges, can you see my box? Again, I've kept the color scheme because I am Mr. OCD. I've kept the color scheme there, and I've also kept the blue around, and then I've just lightly colored the middle. Put that custom to however you want it. There. And you can go to that. Okay, cool. That's how I want mine. You guys can go ahead, choose your own. Do whatever suits, but again, we want to keep it neat and precise because that's what we're going for. neat and precise moves. All right, so now what we want to do, we have our weekly, daily, 4-hour layers on the chart, okay? Those layers, now what we're looking for are price areas in which liquidity and volume reverses in the market and starts. So A to B. It's quite easy. It's quite a simple mechanism, to be honest. But we're looking for areas in which now we've built foundations and now we're beginning to understand why and where certain price points are moving in the market. We can then go in and layer on an additional tool. So here we have the price that rallies into the weekly, and then we have the candle that reverses and then the market pulls back. Here we have consolidation, and then we have the uproar. Before the uproar, we do have a candle here, which is supposedly, it's basically, this is the red candle, green, green. Then up here we have green candle, red. So we have the more or less starting point of the rally. Then we have the starting point of the failed price. So what we just want to go in ahead and do is we want to just go in and we want to mark up the area like that, like so. Each area is going to differ. So we have this area right here. We have this area across here where I'm just taking the bodies, okay? And another one would be, they're all going to be different in terms of thickness, okay? But I can see here where price collapses, we have the wicks, we have the rounded bottom, and then we have momentum pushes. So it's the candle just before the momentum or after. So it's kind of hard to explain on just one currency. I'm going to go through all four and then I'll try to reiterate. It's hard to translate this information because a lot of it goes on in my head. And again, translating it in an understandable way for people is relatively difficult. So I'm still learning as time goes by to do so as a quote-unquote mentor, but I'll try my best. So what I've done is I've marked on areas where price starts to rally, price fails, and starts to rally or pull back, and so on. So here I take the body, that was a red candle, then we have the green candle. So it's the candle after we want to, boom, go in and take note of. Here what can happen is, what's happened is the price has been broken down, price has come back in, wick 1, wick 2, wick 3. If I go into the hourly and look at that PA, if I spotted that at an early stage, look at what's happening. Market comes back in, 1, 2, 3, 4, market comes back off. Now what I'm expecting is market to come back into this region and we're building confluence. I would only do this on the 4 hourly to keep it clean and precise. Lining up with the hour, look at this GA falling off the cliff. So let me just translate this over to the hour. Again, I'm going to give you more examples as time goes by. In the hourly over here, if we found that and if we highlighted the first candle that pulls back off the highs, bringing that area across, this region goes from 8450 up to 1.8480. It's a 30 pip region. This one is probably around, I don't know, 5 pips or so. So each one's going to be different. But by me layering on where the body of the small doji over here and bringing that across, look at what's happening with the candles, the wicks. 1, 2, and you can see reaction, reaction, reaction. In coincidence with the 4-hour arrow which I've placed on. So we do the arrows first, we follow these steps, and then we layer the chart. We can clearly see where the money and the market is going to run to and from. If I do go ahead and grab this and then bring it over to the right hand side, let me just remove this level for a moment, we can clearly see that upon delivery of our range, it's evident that, number one, that trade that I took earlier on is now reinforced by a secondary construct and confluence, okay, taken from this area. And we can see where the spike's gone through. That was my first trade earlier this morning. And then here, once again, we've come back below the region. We spiked straight back through it. And after this bearish engulfing formation, that was your entry short. And then look, you would have been in profit straight away. Let me just check on my pound trade. So sterling right now, it's a little bit wobbly, but we'll break that down in a second. So So what I'm actually waiting for is these areas just build up confluence to what we've already put onto the chart. Now, here for me, GA, if I just expand this 4 hourly, okay, I'm looking for price to run into this zone. I am expecting it to, because I have two confluences more or less together. Once we find the confluence to our miniature region, where we found the body of the candle before a blast off, body of a candle before a pullback, the market is likely, but highly likely, to be pushed back into that region and that range. So even though I have the 4 hour right there, I am expecting market to surpass that and dump itself into here. Then what I'll be waiting for on the hourly, if I go ahead, copy and paste that onto the hour, I'll be waiting for, okay, cool, if I did take this trade short, 8200, I know that there's a potential here that A to B is now finalized on the 4 hourly and the hourly. I can now look for trades in the opposite direction and be on point and be on form in order to rape the goddamn currency pair. So for me now, again, I'm not in this trade in particular anymore, but 8.2, another 89 pips, 90 pips to the downside. I will be wary, I will be taking profit at these levels, and I will be looking for a rebound back to the upside to maybe fulfill something like so. Back up into that region. That region, market, we look at the spikes, we look at the PA. Again, as we get through more videos, and I keep tracking these currencies and uploading information for you guys so you can see this in real time, I'll be looking for either a rebound back from that level. So the rebound could look something like this, or we could go through, retest it, and then go into new highs and actually change structure completely. I hope that makes sense. So 4 hourly, I'll go through gold, I will go through the other currencies, but what we are looking for is once we are satisfied with our markings going across, we then jump in to see any higher high points, higher lows. So here we have a significant high, and I've just highlighted the first candle before on the collapse after the rally. Here I've highlighted the body, which signifies the rounded bottom before the liquidity bump and the volume coming into the market. Over here I've looked at the consolidation and I've highlighted the candle, the opposite colored candle before we have the rally. We have 1, 2, 3, we have the 3 pin formation there as well on the daily. So this highlights to me that this area which is consolidating, which is picking up money and choosing its direction, getting ready for the next momentum boost. Because what we can also see here is where it's spiky, we can see the spikes have been fulfilled. Momentum is now broken above the prior structure high, which we put on with the 4 hourly. It's broken through that. It's also broken 1, 2, 3 wicks. 3 wicks gone. Sink back into, so it can be confidence to hold a trade and then take a trade based back off this level to the upside. Okay, so again, that's why I like to keep everything so neat and so pristine. But we got double layered confluence here. We have double layered confluence here from the wick area. Taking up there, and then we don't really have super double, but we have a daily relatively nearby. Okay, so that's GA in a nutshell. Let's go on to gold. Right, gold is quite simplistic and straightforward as well. Oh, by the way, guys, with this, as you've seen on GA, I'm only really focused on the last week or so's PA, price action, because what we're doing here is we're marking out the intra-week cycles that happen where money will be displaced from A to B and where money will be taken. So here money should be transitioned from overall A into B, okay, then maybe A into B again. Consistent cycle. So my focus is primarily on the last week or so, or the last 2 weeks. So with gold in particular, I don't need to go all the way back. An example, I'll go through some past examples. Let's go through the past example first. So what's actually happened is what we're looking for is the pullback of price and the momentum build up. Momentum build up is 1, 2, 3, 4, 5, and then it's gone. Bang. Okay. Over here, after the collapse, after the price spikes right into 1550, we can see the first initial pull down was this candle right there. Okay, whoops. Now that lines up nicely with the 1542 daily level. What's happened here, this is really, really good because we can again use this in the future, because if gold wants to go back into this region, it could pop up and then it could slam back to the downside. So covering this in further detail, let's have a look what's going on here. What I'm focused on, again, the wicks of the candles, removing the obstacle of colors. We can set our focus primarily to that. Now, market breaks down, pulls back up into this region. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 spikes, and then pulls back down again. This is gold on an hourly time frame for actual trade setups and suggestions. So if I just go ahead and copy and paste this just so I can show you what's going on the hourly, let's expand that. Look at this. Boom, 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 price, bearish engulfing, rips the price back down. We retest that area, and that's a nice 100 pips right there. Market pulls back, breaches the high, comes back below, bearish engulfing back below, spike into it, breakdown of price once more. So that's pretty decent. Over here, looking at this from the 4-hour perspective, clarity is king. So we spike above, below, above, back, below. So what's actually happening here, we've come off the weekly, 1550. We've had our third drive high by a few pips. Bearish engulfing, the market's come back below. We've actually tested that weekly once more on the back end of this candle. And now we're sinking back below this area of liquidity across here. Okay. Once the market's back below that, that in itself there is back in sell territory. Boom, we're probably going to break. What we're going to break? This low here. Stops are going to be under here. I'm going to go into this further detail, a lot further detail as time goes by, but stops are going to be below this level. So markets penetrated them stops for the people who are going long. This cycle goes on and on. Then what's happened is market has picked up more orders over here and pushed itself lower into the 1483 weekly, and it's actually formed that weekly level. Now, another area of value would be, we have the drive push into the high, and then we have the collapse, would be this candle over here, right there. So we've actually layered up good confluence. What I would personally do, because this one has been abused many, many times, and you can see that in the past, I would move that and I would take this fresher one, I'll bring it across. I would also prefer that fresher one because it lines nicely. Look at how the weekly level of resistance more or less fits perfectly in the center, in the central element of that zone. Now what can happen is, right, we have that zone. Before I continue on what can happen over here and what I expect, let's just go a little bit deeper into the base and the bottom. If we zoom into price, see where the market has pulled back into and then reacted from, we can clearly see, 22 minutes into the video, we can clearly see here, we've had that base point low after this huge crash. So we've gone from a significant high into a new low. We've taken out level, so there would be stops here, and when I say stops, stop losses, long, stop losses, long, crash straight through, stops out, and then we've had this volume boost here, which is coming to 1420. This would have been the first point of call on this, on that candlestick there, because we can see where the volume has been transitioned. So we've gone from A into B, now we've gone from A into B, then we've consolidated. All the market has then done is look how it's responded to this area, this region. Look at this, spike into it, volume boost, consolidation, spike back into it, volume, liquidity. So here, liquidity needs to build. As an example, low liquidity is small consolidation ranges. High liquidity, this is medium liquidity because the volume is quite large in terms of the span of how many pips it is. This is a good 200 pips. This is like 100 or so. Low, and then we have the boost. after liquidity is built, so we have stab 1, stab 2. General rule of thumb, you can write this down, is as the secondary and third touch are the ones that we can trade from. Obviously, we want to find these areas as soon as possible. Come on, pound, show me some love. Now, what I'm expecting over here is money is going from A into B. Yes. That would be a secondary touch. Will that secondary touch be the one that folds gold back into lower territory? Maybe even taking out these lows here, because again, stops are going to be here now and here. Will it fold or will it go higher? And that all depends on tracking the day time frame, tracking the weekly, and the top-down analysis perspective. So gold right now, it needs to make its decision as to where it wants to go. Are there any areas here of value? Well, yes, there are, where we can mark on. Look at this consolidation block. Look at how price responds and reacts to that. Look at the support that it sat on the day. We built this chart up fucking good. We built all of these charts up very, very well. This is taking the piss. Look at that spike. Come on, son. Remember, the 4 hourly's got 2 hours left on it. It can't. Okay, it's just crazy. It should roll over soon. Patience. I'm not even in that trade, but pound, on the other hand. Just past break even now. Okay, so going back over here, look at this consolidation block. What we can see is this small area, this candle where the spike comes in and then we shoot off, so 1 and 2. That would be a smaller area, a little region right there we can maybe build up on. And then we can see where the price has actually gone from A to B. Could this be A to B instead of A all the way up to 1550 as B? Who knows? We can reverse from this area. And if I was to go into gold and just pull up the chart once more, taking copy paste, that's how it looks over here. That's how it's translated on the hourly. So what's happened is the spikes have come back through, because again, the spikes tell a clear picture and paint a nice role play, PA role play. Spike, we're under that now. We're under that now. So that gives us extra confidence. Obviously, we have the daily there as well. If we was to transfer that over, we're building confidence there for potential rollover short. What would make this suggestion invalidated, what would invalidate my suggestion, would be a run through that zone, such as a boom, and then come back, maybe retest that, and then see you later, mate, all the way back up there. That would invalidate this short setup. What validates the setup, which is still yet to go through, is just simply this hourly PA coming through. See all these spikes here? We need to take out this small region. We can use, again, we don't want to congest this and put this any of the hourly or 15-minute analysis on our left screen. We want to keep that clear as day. But we do have this small area there where the wicks are, where gold needs to just collapse and break through. So, one step at a time. Video, by the way, is getting on to 30 minutes, so I'm going to break up pound and USD CAD in further videos. But you get the picture. So stepping above this now, and now if we actually focus on just some of the previous price action which has happened and why these spikes are actually occurring in the market, looking at that small area right there, that's where the market's come back into. Boom. Because here, this is where the money is being picked up. There's so many other things that I'm not explaining. I have to keep something secret, you know. But this here, money is being picked up and then money volume comes through. Look at this high, okay, look at this high. Let's study this in fine detail. Look at the bodies of the candle. Let's bring that just across. Look at how that area is now broken. It's retested, okay. Can you see how all of this fits together so nicely? It's broken, it's retested, and then boom, the market comes through, retests that area, and then goes all the way up into the highs. All the way up into the highs, resets itself, 3 spikes, 1, 2, and 3. After each run on gold on this, can you see the pullbacks? Bang, bang, and then finally the third drive comes down, takes out previous 2 spike stop region 1, stop region 2, for longs, kills both of those stop regions, market resets itself, shows us new area of flow, more or less, back in once, back in twice, and look at how the PA comes through, and look how the market starts to move. So 1, 2 from previous, still valid now, and then we can see over there how market actually breaks that structure going into new territory highs. Let me just actually keep that on. We can just keep small ones on like that for ease of purpose. So it's relatively beautiful what's going on here. It's quite straightforward. Okay, so I will cover anything that comes to mind on the next video. We'll just hit 30 minutes on this one, so I don't want to overload you guys with information, but I hope some of this information is sinking in relatively well right now. And onwards and upwards we go. So next video is going to be GBP USD and USD CAD. So let me just get this one ready. Thank you.